All right, good morning, everybody. Hope you're having yourselves a fantastic start to the AM here. Happy Wednesday and happy FOMC Wednesday. Not quite sure what to expect from markets here today. Generally, FOMC usually a slower day, right, than what we normally deal with. So let's just see how price action wants to behave, where that kind of momentum wants to show up, and then from there, we can hopefully figure out what's going on. A few things. So this is sort of like a pattern that I think I really want to think about a lot here today, and see, hey, what either invalidates this idea, right? So a move here to the upside, or what gives me that kind of continuation breakdown, right? Very similar structure. So first Japan carry trade, right? Same candles. Then following day, inside bar, and then the third day, little fake out higher and sell off lower. The only real difference, right, between these two patterns, in my opinion here so far, is that Wednesday the 7th was not an FOMC day, so we didn't have necessarily that same sort of catalyst. So that's probably the one difference. But yeah, just worth kind of keeping an eye out on that and seeing if we can get a either similar reaction, right, and what would it look like, or, right, how would we get a breakout here today and invalidate that PA. Generally, on FOMC days, it's not a session where I'm always super busy, right? I end up usually being a little bit calmer, right? A little bit more slowed down, a little bit more, I don't know if you want to call it like patient. It's just the trade that ends up happening here today is more of like a positioning trade, right, versus a trend creating trade, at least in that initial kind of like 9 to 2 type period. So it generally is a day where you want to be a little bit more cautious, and I think we've done a really good job of that in the last we'll say week or so. But it's definitely just a bias you want to have. I think in general, on these days where you're kind of expecting volatility, but then volatility doesn't show up, or doesn't behave the way that you expect, it's a really easy day to get tunnel vision on price action, because the hope of a big move kind of bites at you, right, or barks at you, but it doesn't really happen. Like, moves just fail to the upside, moves just fail to the downside. And then you get in a spot where you don't see right from wrong, you just see P&L. And so we want to acknowledge that is a easy bias to be established here today. And instead of like aggressively trying to catch something, we want to basically do the opposite of that and spend more of our time talking ourselves out of trades than into them here today. So that's definitely going to be a priority. Like I said, one trade yesterday, right? I think 3 trades the previous 2 days. So it's been a really controlled kind of like trading atmosphere or trading environment. And I think we can definitely keep building off of that. One thing I'm going to keep focusing on here, I think people have found this helpful, is just being a little bit more vocal in describing the areas that I'm looking for to act as support before I look to enter my trades. So I've been trying to share that out, basically just found the words to be able to describe that, if that makes sense. And I'll keep trying to do that. If for whatever reason I'm in a position and you feel like you're missing something about what I've been looking for, and I want to qualify that, right? You're not asking me what ticker I'm trading. You're not asking me what time frame, right? Those things you can see on my screen. But if you're asking like, hey, Michael, what do you want to see as your entry price? Or what would a strong reaction look like? Or how would you know you're wrong? Or what would be your position sizing even, right? If you want those types of questions answered, those are the ones I have no hesitation, no problem. Actually look forward to answering those types of questions, because they make everyone better. And so if you have any of those types of anxieties, please do not hesitate to ask those types of questions. I'll be very happy to answer those. I think they will make you a better individual, better trader. And the more clarity we can have in our process before we make a decision, easier it is for us to make the right one, right? That's the lesson from yesterday. Yesterday, probably the most specific I've been just talking out loud over what I'm looking for. And that ended up being like one of the calmest trades, right, of the year. So I think more of the same, right? More compounding that, taking that as the lesson from yesterday, not the P&L. And hopefully right from there, let's keep stacking them up, guys. It's been an awesome year here so far. One red day in January. So let's not jinx it. But I think this focus and emphasis on being better losers, what a difference, right, it has made to our bottom line. So, okay, enough ranting and raving here. Let's start mapping things out. Let's figure out what we want to do here this AM, and let's set ourselves up for what should hopefully be a successful trading day. So first things first, right, FOMC here today at 2, no data here at 10, and like we talked about with FOMC, we're very much expecting, right, like pretty slow market up until say that 2 o'clock time frame, and then kind of like an algo move right at 2, and then a second one once Powell starts talking. So we'll see how aggressive that ends up setting us up here for, but let's be a little bit patient. The other element, right, is we got crude oil inventories here at 10:30. So again, right, that's a pretty big deal for CL, and we'll see how that basically impacts markets here today. All right, what's the count here on ES? Let's get going there. Yeah, 1 out of 3. Probably even call this like an inside bar. Doesn't look like it made a higher high. Okay, and then basically we're trying to think about, like we talked about, right, this pattern kind of repeating here from that early Monday, or early August Monday, sorry. So what would it look like, right, for us to continue to get downside breakdowns? Well, I think it would be like a retest maybe of our 6110 and then break down under that 6079. We probably don't want to see, if bears are strong, right, for them to make a higher high above that 110 area before breaking down, right? And then if bulls are strong, right, it would be breaking out over that spot, giving me a further gap fill, and then pushing up towards all-time highs. So we could say ORB breakouts towards pre-market high, and then right, and then the exception here, right, would be look for like if bears are weak, right, what would bears weak look like? Well, it would look like them not being able to hold lower lows, right, so running out of enthusiasm and then pushing back up, right, to the pre-market high. So if bears fail, it would be a failure on a lower low, right, which is why we have that fake out scenario. And then if bulls are strong, right, they're gonna break out towards the pre-market high, and then like 6160, right? So pre-market high is gonna be 6110, and then it's, again, I just go 10 points along the way, right? 6120, 6130, 6140, 6150, 6160. And then to the downside, right, it would be a lower low and then a move down towards 6020. Cool, that's plenty of space lower. Does that kind of make sense? All right, perfect. Okay, NQ. Similar, not so similar. What is different about this pre-market structure relative to the SPY? Or the ES, I should say. So I would say, right, that the pre-market here on NQ isn't faking out above that Monday candle high, right? That would be the thing that really stands out to me. So ES, right, already faked out above that high pre-market and now selling off, whereas NQ is still kind of formally consolidating inside that range. So again, probably makes ES a little bit easier for us to trade because we have a more defined structure here. And NQ would probably either have to fake out above that high, right, or break down under that sort of 2150 area for us to get that that continuation. So Kyle, I made a video about that in the Start Here channel. You'd be more than welcome to watch that. So please take a look at that. In general, it's just targeting previous day's highs. So looking at the next daily high that's in my way, and then just keep going to the next candle on the left. And then on ES, I do gaps of 10 points between those levels if there's a big gap. And then on Q of gaps of 100 points. So just basically targeting the round numbers in between. And then on CL, I'm going every 50 cents between those key levels. So there's a video that explains that, but yeah, there's that brief overview of how I pick those parts or pick those points. So NQ, right, inside bar without a fake out. So we're looking for a breakout over, say, 21,760, right? So round that up to 800 towards 22,000. And then we'll go 100 points along the way, right, towards basically that next point of contact here on that trend line, right, which would be 22.1. So we'll go 21.9, right, 22. And then 22.1, right, which is the, I always hit that button by accident. It's the next daily high, essentially, right, rounded up to the nearest round number. Cool. And then to the downside here, right, aggressive rejection and then breakdown towards, say, 21.2 and then down towards sort of that Thursday low, right? Again, next low of day directly to my left, which would be approximately 2,800. Yeah, I don't think I need to change anything here, truth be told. Make sense? All right. If we're judging which one's going to be easier to trade, I think I already said it, but let's see if you guys are paying attention. Do we think it's going to be ES or NQ, and why? And why is it ES? Yeah, right? ES because we're already seeing one side kind of break this consolidation, whereas NQ still needs to give us that move through consolidation before we can identify if it's like a mean reversion type setup or if it's a breakout setup. All right. CL, inside bar, fine. 1030 data, right? So we would have a possible breakout trade. It would have to be above that 75.28. So we'll call it 75.28, right? And then next low, next high, 76. And then we're going 50 cents up towards 78. So 76, 76.50, 77, 77.50, 78. And the only difference, right, between why I'm basically looking for a breakout towards this initial move, it's big space, right? So I know that if I go like the 3-min time frame, my ORB target's going to find a level in between that 75 and above. So I think I'm going to be able to basically split that difference in half, and I can be a little bit more conservative. Yeah, so all I'm looking for here is a idea of how strong the daily trend is, right? So I'm looking at the previous daily candle. So if today is Wednesday, I'm looking at Tuesday's candle, Tuesday's daily volume, and then today's pre-market price action. And I want all three things to tell me a variation of strength, as that gives me a better idea, right, of how strong a potential trend is. So let's say that a candle is red, right, and it's a strong shape. Cool, right? That's a good indication of trending price action. If we have an increasing volume standard accompanying that candle shape, right, that is generally a good indication of building momentum and that the supply and demand is kind of going in your direction. And then if you have price action giving you the same sort of story as the previous day's candle, right, and the previous day's volume, then you have a strong idea that the price action is so far also behaving in your direction. So the 3 for 3 tells us how strong price action is, and it tells us what piece of information is missing so that we can get back to having strong price action, right? So when we say we're with volume, for example, right, that means that I'm missing the today's PA to be telling me bearish, right? If it's telling me that it's an inside bar or a 1 for 3, that tells me that only one of the three elements are telling me strong PA, right? Which is another way of saying that price action is relatively weak so far, and I need to see volume stepping in, and I need to see price action showing up and giving me a strong element of kind of cooperation. So it's both a kind of like scorecard, right, for how strong the trend is, and it's also like a legend over what's missing, so that we can wait for that bit of information to show up so we can trade it successfully. And then to the downside here, right, we're targeting pre-market low, so 73. And then down towards 72.50, 72. And then we'll call it 71.50. And that's plenty of space. Cool. All right, let's fire through our other names here quickly. Apple, 1 out of 3 here to the upside. So non-trending price action opening up in the middle of the range. Cool. And then we're looking for a 240 breakout or a breakdown here under, say, 230. Okay, Tesla, fake out lower. Just kind of looks like indecision, right? Last couple days. And we'll call this a 1 for 3 here to the upside. And we're still looking. I don't think I need to change anything here. Okay, Microsoft. So I'm going to look to trim this position here. Someone's asking me about this yesterday. So I'm going to trim about probably 2/3 of my swing position here going into earnings and just hold a chunk if something crazy happens. Again, pretty big move going into earnings, right? It's up 10% basically since my entry price. So I don't need to be greedy here. That's plenty of follow through. Generally on earnings days, right, I will not trade that name. Okay, Amazon, 2 out of 3 here without volume, so that's the missing ingredient. Green candle, green price action here so far, decreasing volume. So it needs to break out over 242. And then to the downside here, I'm not sure if I have a very easy bear case. I don't know if I want to sell into Monday's price action here. So I'm going to go NA on a bear case. And that's a little bit of an exception. I think the only bear case would have to be like a really aggressive fake out again. And I don't know. Can't be asked. All right. Amazon inside bar. And so we're looking for a breakdown here under 112. Or looking for a breakout here over 118. So Microsoft just been a swing trade. Bought off the 200 EMA. This would have been right around here. So kind of like 2 weeks ago. And basically just been riding this move up here. Entry price of 414. And just playing with stocks. With shares. So, bullish 118 breakout here. Or to the downside, we're looking under, we'll say 113. Okay, NVIDIA, still got a pretty big bottom-up gap fill. Didn't quite give me that inside bar we were thinking about, so that's fine. We need to be a 129 breakout, bottom-up gap fill. That's a big move, though, right? So we got to be a little bit cautious. And then it's just 1 for 3 here. To the downside, it's a little fake out lower. So we need to be a breakdown here under 116. Or a gap fill fake out. Okay. Meta earnings today here. 2 out of 3 to the upside. Without volume, right? And so we're looking for a 683 breakout. Or again, this is very similar to Amazon, where I don't know if I want to sell into that Monday volume very aggressively. I think that bothers me just a little bit, so I'm going to be still NA for a bear case. Okay, Netflix continues to consolidate basically inside yesterday's PA. 2 out of 3 without volume, so I don't know if I really need to change this. It's just catching its breath here, waiting for either that next leg above 1,000, right, or that breakdown here under 950. Interesting. Google, can't tell if this is an inside bar here yet. Looks like it might just be a fake out by like a penny. So we're going to look for a breakout here over 197. So 197 pop, right? And then to the downside here, it'd be a breakdown here under 190. Any questions here, team? Any questions? All right, fantastic. So I'm going to go make myself a quick cup of coffee, spend a few minutes here visualizing a successful trading day, and then I'll jump back on here in a few minutes and set myself up for what should hopefully be a, in control trading day. So be back in a couple, team, and we'll talk then. All right, so a couple questions here. So what's a fake out? A fake out is when you make a new higher high or a new lower low under a key price or a key level and aren't able to hold above that price. So in this ES example, the fake out is a failed move above that 61.0575, which is approximately that Monday high of day. So we've attempted to break out and go through that level, and we've been unable to do so. And the reaction of moving above and then back down can be classified as a fake out. All right, so that's market open here. Let's see how the day comes together. Early selling pressure by the looks of it. Now let's see how the day shapes up here. Again, we can play price action in either direction here this morning, but we also understand, right, that with FOMC here at 2 p.m., this is not necessarily setting up to be a day where you want to be particularly aggressive, right? The trade that you tend to get pre-FOMC is more of a positioning trade, right? A protect myself trade versus a let me front run the news narrative type trade. The data doesn't really leak anymore like it used to. There's too many big fines for it. So, yeah, there's very limited reasons, right, to be hyper aggressive chasing a massive trend day, which is why on the indexes, right, with ES, I like this idea of a potential fake out, still kind of mostly inside the previous day's range, because that kind of sets up as like a trim your exposure, reduce your position sizing type play, and that makes, like, that story makes sense to me on a day where I'm not expecting a trend day, at least not a trend day morning, if that makes sense. Good start from the apples of the world. But yeah, a lot less volume already than what we had yesterday. Quite a big difference. Right, so if we're looking at NQ, for example, it's 8.3 versus 14. So it's going to be like 30% less volume than yesterday's open. Again, not really a strong indication of trending PA, right? So far, so patient here. So someone was asking me, maybe I was asking myself, what the next evolution of my trading is going to be. And the answer is playing then this like initial quick breakout that happens, right? So if you talk to a lot of the OGs that trade the opening range, they're trading the first either like 1 minute or 30-second breakout of the first 30 seconds of the day. That ends up being their kind of zone. So like, for example, we've been putting a lot of energy and focus into waiting till we see our confirmation candle, right? High or low, holding as support for an entry. It'd be like trying to see that same reaction on a breakout below or breakout under the opening range, right? So you'd be looking for that same sort of thing. So when I talk about trading being like an evolution, right, and a step of progressions, to constantly get better, that's what it means, right? So now, right now, we're looking for that like really good reaction post confirmation candle, right? See our previous areas of support, right? Holding like support, and then using that skill set to apply it, right, to a different variant of trading. So then, right, instead of waiting for confirmation, right, you look for that reaction post breakout, and you can catch moves earlier with tighter risk. Right? Then if you build up that muscle memory, you build up that skill set, right, all of a sudden things rhyme. Yeah, it's a progression, right? Like I don't think this is a change we'll be making in the next day or two. This is probably something that you work towards over the next 6 months, right? We've introduced enough changes to the trading here recently, right? From just being more aggressive in cutting and being more aggressive to adding, that you don't want to make too many changes at once here. You just overwhelm yourself right before you can create new habits. So far, so slow. So yeah, just to finish building off of a thought here, um, like the objective, right, with trading ultimately is to be a connoisseur of price action, right? To be able to watch and study, be specific over what strong versus weak price action looks like, and just sort of building up that like level of conviction or confidence. And those have been like what all the changes have been towards, right? So it's been about getting out of trades the second they don't feel wrong, instead of taking a max loss, right? Taking a $300 loss when you were supposed to take 1,000 is a really good outcome. And just learning how to trust that feeling, right? Learning how to build confidence that that actually is the right decision. Getting good at basically ignoring that hopium and being the best loser possible, and just slowly stacking up those skills, right? Slowly compounding away, makes life a lot easier for us as traders. Makes it a lot easier to win. So we're possibly setting up here as like that fake out thesis, right? Fake out 1 under the opening range, fake out 2 under the fake out. Pretty good risk reward. Whoops. Can you guys hear the construction that's going on outside? So, can you hear it at all or no? All right. Well, it's driving me insane. Glad it's not driving you insane. So, going to be looking at NQ here a little bit. So I'd say pretty much looking at that 40 area as acting as support here if I'm going to pull this off. Yeah, so green line would be my stop loss price. White line would be my profit target. And how am I determining it? Well, stop loss is low of my fake out candle. White line is just based on my like algo basically mapped out zones. This upper red line here, right, is high of day, right, approximately. Yeah, this red line here is the stop loss, Cabo. You're correct. But I have the red line here on my indicator as well, right, which is profit target. So I got that one too, right? Okay, but it did not hold that area of support we were talking about. All right, so now maybe you have a second fake out type setup. You were looking for the reaction back up above 27. Which doesn't look like it's going to hold under. So now we're starting to look for potential breakdown trades. Okay, NQ better as a breakdown trade. And we're targeting just the red line here. And we're looking to see, right, if this 14 can act as support for a continuation move here to the downside. Don't chase it, right? If it wants to go run without you, no worries. You can always take another shot at this on like the 5-min time frame. But don't chase that move. So now we're looking to see, right, if this red line can act as sort of an area of resistance, right? If basically bulls can't climb back up above it. And then we can reject there pretty aggressively, right? We should be able to look to then enter our trade. So far, good little breakdown under, pulling into it, but I don't know if I'm confident yet that this is going to hold. Now that we're a little bit above, right, you'd like to see a pretty aggressive sell-off back under that red line. Hasn't happened here yet, so I no longer think that this trade is going to be viable on this initial entry timing. Okay, so now we're back under that red line, right, and we're going to look for it to act as support. Possibly look at that previous reaction, right, as a bullish failure. And I'm just watching this candle, right? I got everything set up here on my trade. Stop loss 27. And I'm just watching that reaction, So now again, right, we're looking for a pullback into my area. And again, right, nothing has told me here that this price is ready. It's basically staying in like a 20-point range, right? It's going down to 500 and then it's bouncing back up to 514, 520. So we haven't missed Bupkis yet, right? So this idea that I need to have rushed my entry here, is totally false, right? We've been really specific over what we're trying to see. We haven't seen that reaction really occur here yet. It's all easy to just sit on hands, right, and wait this thing out. All you would have done here so far, being hyper aggressive, is lost money. Who wants that, right? Life is too short. So again, right, if you're defined and you're specific over what you're looking for on your entry, it's much easier to just sit and wait and not like fall in love with your ego or your thesis here. And you can just sit things out. So now we can watch this on the 5-min. Right, so again, a breakdown trade would look something like this. Pretty aggressive move for sure. And now we want to see, right, this 498 to act as our support here to the downside. So now that it's broken down, get rid of this. And we're looking for this red line, right, to act as support. So what would acting like support look like? Well, once it touches back at that low of day, we should see it want to sell off faster, right? Then it moves higher. Well, right now, it moved lower and then made a higher high and immediately pulls up, right? So again, we've done a good decision here, defining what support would look like. Did not see that price action. Basically went through that level that we mapped out like it was not even there. So I know, okay, entry timing isn't ready for me here. Let me be patient. Let me sit this thing out. And okay, I'm hanging out, right? I've missed fuck all here so far, for lack of a better term. And now I can put maybe my energy onto ES on potentially the pullback entry technique and then reset from there, right? So again, okay, one setup fails. Setup failed there on NQ quite spectacularly, I would say. And so we switch over to now a different possible product, a different setup, and see if we can get, identify what the key zone that we want to see basically get defended is, and then what a strong reaction to that area would be. So I'm going to say this like 83 to 84 area, right? It's kind of be what I'm looking for here, kind of from this red line and above, because I've mostly seen top heavy sellers, right, defend that zone here so far on this pullback. So I'd like to see a big sell-off occur here again, basically inside that wick zone, if I'm going to look to time this entry here to the downside. And then a stop loss, right, would be 85.75. So that would give me, 2.5 points. And again, I'm trying to be very specific, right? So what would a rejection look like? Well, once it makes above that 83.50, it starts to feel like it's out of breath, right? If you ever gone hiking or running in like serious altitude and you're just like, oh my gosh, I can't breathe. Like, oh my gosh, this is so difficult to do. That's what we want price action to feel like, right, when we're looking for that breakdown here to the downside. We want it to feel like it's out of breath, right, like it's struggling for each step, and that when it stumbles right above that stumble down is more aggressive than the climb higher. So far, we haven't really seen that like out of breath feeling here yet anywhere, right? We've kind of just seen really wicky, really quick, really kind of like choppy type PA. So again, that tells us maybe more of a day of consolidation versus a trend day. And so again, no real reason to be hyper aggressive here yet. So just going to keep watching, right? We're now a point away from that potential reaction zone. And we're just looking to define, right? What does strong price action look like at that area? What does weak price action look like at that area? If I can't answer that question, I shouldn't be taking this trade. So that's what I'm asking myself here before I take this, right? That's what I'm asking myself as I'm watching price action pull into this zone. Is what would a strong reaction look like here? Okay, a strong reaction to 82.75 would be maybe a small move above it and then a really aggressive move starting to go in my favor, or basically like I always call it stairs up, elevators down, right? So stairs up, elevators down, and then a retest of 83, whatever it is, and then a really quick sell off again. If it's a weak move, right, then that red line or that area is going to behave as if it doesn't exist, right? Or as if it's not impressive or important. And it's just going to climb through it really, really quickly and make me feel like I need to rush my decision. So, okay, I've now defined what I think a strong reaction would look like, and I've defined what a weak reaction would look like at that area. And so now I'm just focusing on, okay, where's the strong reaction? What does this look like? Is this giving me exactly that behavior? And so I can view that as like a binary event instead of if the opposite, right? I mentioned the opposite of that reaction is making me feel like it's going to break down. So if that's a weak reaction, right? The opposite, right, is relying on the fact, right? Not the feeling that it's trying to make you kind of experience. Right? So if I said the strong trade is, yeah, I think it's going to move this way, it's binary. The weak version is I feel like it's going to move this way, right? And I'm chasing the gut versus chasing the plan. Okay, now a second fake out setup here on NQ, right? Fake out at the psych level. Now 2 attempts to break down under. I'm very interested in this. Okay, so now again, right, we'd probably be looking to see if that 1975 area can act as support. Right, so far, bouncing to it and holding. Let's see if they can get back above on these little pullbacks here. Okay, so setting everything up here. Again, just watching this reaction. So far, not a super strong bounce in either direction. There's much better. So now you want to see a gentle pullback back into that area. Not gentle there. That was not gentle. Okay, now you want slow. Come on. Okay, as is, this would be a 1 contract play. Okay, guys, so I am in average price 529.50. Just 1 contract. And pretty much green right away. Yeah, this is just a fake out setup, Sammy. Right? We're playing the fake out thesis on this trade. So we've seen price fake out twice under this 500 area, and then you're getting separation away post fake out. I wouldn't say that that's a great reaction there. Let's see if it can go. Okay, guys, I am out of this trade. I have closed this position. Right, bad reaction post entry, so couldn't really hold highs. Good volume, but weak candle. So I only got 1 out of 3 of the elements, right, with it being increasing volume. So just look to get out, and I closed for a $14 win. Sammy, there should be a video I posted in the Discord maybe last weekish in the members chat about basically the fake out pattern that I think I've seen. I think that was a good decision. Okay, so again, right, if this trade starts to find another area of support, I will look to jump in again. That would be fine. Just haven't seen that happen here yet. Yeah, 100%, right? So if we get another low vol fake out here, I'd have to see a fake out now under this 494, right? A low vol fake out back under that price area, that would certainly be very interesting or very appealing. But yeah, basically, I'd be willing to keep playing each fake out under that then climbs back above, and then hopefully buying on the climb up, if that makes sense. So I made $14.14 on that trade. Monster. But again, I think it was the good decision, right? No good separation really above or below our entry price. So just get out, right? If your timing or your entry isn't going to sustain and those higher highs don't want to hold, it's just ego to think they're going to get bailed out, right? Yeah, Majid, your paper trading and how you want to trade is up to you. I don't know how your settings are set up for your paper trading margin requirements and what it would take to trade one future. So yeah, I would recommend probably trading on the margin, as it's probably most likely to not give you any unsurprising error messages. But again, that for me is a you thing. I have nothing I can really give you more than that, to be honest. So, okay, 1 for 1 here. Yeah, so you've talked about this start of the day here, Jared. Basically, FOMC, you're expecting a slower, choppier, more challenging trading day. Not expecting a trend day. You're expecting more of a positioning day. So pretty much the first thing we talked about here to start the day off was understand that that is likely what is going to happen here today, right? Positioning is another word for chop. And so if that's the case, right, make sure that you're doing or making all your decisions so you don't get tunnel vision, right, on price action and just get stopped out chasing these micro moves. So yeah, generally FOMC, slower day, not expecting to the morning to be super, super busy. And it's why, yeah, going to be pretty patient here. Or why trading failed breakouts, right, makes a lot of sense. Interesting. Okay, let's see if this holds. Okay. So far, not a good reaction, right? If you're saying, hey, what would strength look like? It probably wouldn't be a breakout over 560 and then dump. Jay, how did that happen, man? Talk about being a good loser, not being aggressive, right? Not doing any of these kind of stuff. Not sure how else I could have mapped out that it was time to get out of that trade. Like I'm just gonna be very honest here, right? And this isn't specifically for you, Jay. Here, this is just for everyone. But it's when we feel, right, like when we let our greed tell us, hey, I can extend the size of my loss because it's actually gonna make me more likely to survive a pullback and be green on that trade. Like that's the way it feels, right, in the moment. But that is not the reality, right? The trades where you're not green nearly right away, or your entry timing isn't good, or you have to survive a tremendous amount of pullback, are most likely to still end up as losing trades. They're not going to end up as winning positions. So actually doing the opposite of that, right? Cutting your loser as quickly as possible sets you up so you're more likely to be green. It's not more likely to be green on that trade. You have to be able to take that small loss first. You have to be able to accept and stomach that. You have to be able to detach your ego from it if you actually want to become a winning trader. If every idea has to be correct and you're just early, you're never wrong. All you're doing is lying to yourself, and it honestly won't matter how successful or how well I trade, because all of your losers are going to be 3 times bigger than all of my losers. And all of your winners, right, you're going to trust that they're going to turn into losers, and you're never going to make any money. Your ratios are going to be all screwed up, right? Because you're going to be fearful that your wins are going to turn into losses, and you're going to expect that your losses are going to turn into wins. And that type of mindset, right, creates a opposite relationship between the size of your average win and the size of your average loss. So hoping that you can turn a big loss into a win or a loss into a win is as deadly as thinking that you can turn a good sized win into a mega win. And we have to learn how to control those behaviors and objectively look at our trading and be honest over when it's time to get out, when it's time to get in, when it's time to add, when it's time to trim. And if we can't make those rules objective for ourselves, then we're always going to rely on our feelings. And when we're relying on our feelings to make trading decisions, we're just setting ourselves up, right, to reward our biggest fears and make it easy to basically behave within that context, right? So if I'm worried that a trade is going to go against me, and that is my fear before I enter a position, or once I'm in a position, then every decision I'm going to make when I'm trying to satisfy that feeling is actually going to increase the probabilities of that happening, right? So we're getting a pretty similar green to red type move like we had there yesterday, right? So 945 reversal, 942 reversal, very similar. So let's see if we can get a similar type trade here like we got yesterday. We got 45 seconds to go. This needs to hold above previous high of day, right, on increasing outlier volume. So in this situation, right, we definitely do need the volume profile. Okay, so what's missing here on the 3-min? Yeah, outlier vol, and didn't close above the high of day, right? Closed actually right at it. So now we can maybe switch to the 5-min, see if we can get there. 45 seconds to go, definitely has a chance. And if we don't get it, right, we get that failed breakout above. I wouldn't call this one yet a failed breakout, but if it becomes obvious that it is, then we can look to play a fake out thesis if we see another fake out above that 91, and basically just play a range bound day, right, from 91 to 75, 91 to 75. So maybe a little bit early to make that distinction, but for sure it could be something to look at. Okay, 10 min gave you increasing outlier volume, but couldn't hold above the previous high a day. So not good, right? What drops in 20 minutes? Who remembers? Yeah, CL inventories. Spot on. Okay. So we could possibly look here at NQ for this reversal, I would say, right? Here's your fake out. Here's your confirmation, right? This 10 a.m. candle. No lower lows since then. And we'd like to see now this 61 area act as support for a continuation move towards high of day. So far not happening. The stop loss then at 48. So again, right, watching if this 61 can act as support. If I'm being objective here, it has not acted as support, right? It's kind of been bouncy around like 5 points lower, 6 points lower. So far it's like that red line hasn't existed, right? Okay, kind of looks like a fake out right now, pretty aggressively. So not increasing outlier volume. Oh, excuse me. So now we're going back to that possible fake out thesis, right? See a fake out here under 494.25. And then a pullback above this red line. I'll turn it into a orange line. And then, so make a lower low under, find support at, and then go. And just be targeting high of day with a stop loss at whatever the new low of day is. Again, we got a lot of work to go before that occurs. That would be probably the only thing that's interesting here as of now. Not a very exciting trading day here yet. 1 for 1 plus $14. I'm not even sure if I could afford ramen. Now the price of eggs these days. Oh, excuse me. Okay. So now you're looking at something like this. And because you got the aggressive breakout technique, and you want to see basically that 640 area, right, be the one that acts as your support here. So far, it's not happened. A little bit better. Okay, so stop at 33.50. Okay, probably not a good sign that it made a lower low, right? I can. So again, now we're back to looking for the possible fake out under low of day. Everyone understand what I'm looking for here? Okay, so watch carefully here. And the timing of this trade is very important, right? So if you're going to play the fake out, please don't get caught chasing it higher. Right? So it's a pullback under this, call it orange line, breakout above, and then orange line acting as support for a continuation move. All right, so pull back under, establish a low, get back up above, and then basically be unable to break down under that line. So we're definitely expecting a bit of an algo reaction at 10:30, right? Especially on ES. Or more so on ES, I should say. Again, ideas still valid. Nothing's killed or made yet. Nice, John. Congratulations. Doesn't really feel like too much is going on here right now. That's fine, right? Took a shot, didn't get too pot committed to it. Played what was in front of me, not what I wanted. So cool, no complaints. $14 is not the end of the world. And there's still some potential here. Absolutely, Steven. Absolutely. And it's not even the P&L, right? It's not that. It's that it's better to be in control, be deliberate, right? Be objective. Instead of thinking, okay, oh, I got to make $14 here today. I got to make more than $14. The P&L doesn't come from that, right? It comes from having a consistent, repeatable process, something that you can actually scale up. And you just don't have to overthink it, right? You don't have to feel like you have to do it all in one day. And the trade or the price action we got yesterday was a week-making trade. So like this feeling that I need to make money here today, or I need to do this, or I need to do that. It's kind of just like self-imposed BS. Okay, so again, back to watching the possible fake out scenario. Seems like it might be setting up here for that like 1030. Let's see. All right, and what we're making sure, right, this candle might end up being increasing. We just don't really want it to be bigger than what we've seen kind of in the post. So if this candle ends up being like second biggest volume of the day, yeah, that's fine. If it's a little bit bigger than what we saw on the previous two candles, that's fine because they're the smallest two bars of the day. So it's like, the standard's not really that impressive. Okay, so again, watching here. It's got to get under low a day and then back up above that yellow line. Okay, there it is. Now it's we can get back up above. First test. Okay, looking good so far. Let's see. Fake out 2. Gotta get back up above. Nope, not yet. So now you're looking for a move above this yellow. And it'd be like this, right? See how slowly it's moving into that yellow line and then not really being able to get back up above it, right? That's telling me so far that that is not acting too much. Now it's better, much better. Okay, guys, so I am in average price 494.25. One contract, stop at 480. Okay, good start here so far. A little bit confused by your question, Antonin. Steven, keep going here. Don't want to really see it pulling back too far. So the things that would invalidate the fake out before I enter, is that what you're asking? So far, so good here, team. So far, so good. If we hold under low of day, right, with our candle, and if it was like such big FU volume, right, that I couldn't ignore it. But it made a lower low, couldn't hold under, so it's failed confirmation because it can't hold above. So if it's failed confirmation, I'm not going to put too much stock into the volume unless it's like so egregious that I have to. Right? So it fails on confirmation. It's a failed confirmation trade. Okay, I don't know if I like this reaction a ton here. Just feels like this playing out again, right? This little pattern. See if 500 can act as support. Otherwise, just got to get out. So far, acting like it is. Okay, good decision to have not panicked, right? Identified the level, waited for the reaction at it. Perfect. So now let's see if this thing can give me that next leg, right? Survived the first test. If that reaction for you didn't like it, right, then this should be your point to start thinking about getting out as your P&L is increasing instead of on another pullback, right? If you survive that pullback, then you shouldn't be looking to close on the next one. You should be looking to close it as it starts to make that next wave. Now, I'm not quite ready to make that decision. But let's see if we can get a nice pop here. Okay, there we go. 600 bucks. Let's see if it's got a bit more juice. Okay, so now instead of 500, right, wanting to act to support, I want that previous high today, that 22.25. To act as support, right? If it's going to sustain, it should sustain above that area and continue bouncing. So far, the move below has been relatively cautious. So I'm not going to put too much stock into it yet. But again, finger on the X button, looking to get out if it starts to behave the wrong way. Okay, here's the next benchmark, right? Here's the next benchmark. So let's see if it can go. So far, fine. Nice work, Steven. 600 bucks is a great day. Great day. Okay, starting to feel like that's not acting as support here, right? So one last chance. Come on. It's got to close above. It's a higher high, higher low, but we want it to see and hold in support. If it can't hold support, right, I'm going to look to get out as my P&L is increasing, right? So not as it's pulling back, as it's pumping up a little bit. Okay, couldn't hold, right? So we're going to look to get out here on a quick little move above. Come on, come on. All right, guys, so I am out at that 23.50, all out at 23.50. Beautiful. Great trade, team. Great trade. So beautiful, 2 for 2, right? And we talked about, right, the 3 things you want to see. You want 2 out of 3 things to tell you it's time to get out of a trade, right? You want it to hold previous high a day, or you want it to hold previous high, right? So previous high after entry on increasing volume and a strong candle shape. So I would probably argue, right, okay, didn't hold above that yellow line high, right, which is approximately, say, 22.25. And it didn't really hold as increasing volume, right? That's like second lowest volume bar of the day. And it didn't really hold as a strong candle shape. So nothing there was indicating that this trade is going to continue to have a lot of enthusiasm. So you just get out on that first move higher that wants to trap people, right? Get out as your P&L is increasing, and then reset, right? Then see if it wants to set up again. But that was a quick 30 points, just about, right? With 14 points of risk. So a nice little 2R trade. And boom, right? Just about $600 on the day. So is that bad? No, not really. Right? Like I could do worse. But it's just about making good decisions, obsessing over the quality of your execution, right? Being deliberate. It's just so calm, right? It's so much easier to follow your plan that way. It just removes that greed. Yeah, unfortunately, it didn't give us as much enthusiasm, right, as yesterday's trade. But again, we're kind of expecting that here today with FOMC, right? You're not expecting it to be a very enthusiastic session until 2 o'clock. And hey, if I made $600, not the end of the world, right? Or $500, like that's still a pretty good day, all things considered. And it's 2 for 2, right? So think about how we've traded in the last few days, how much better the win rates have been, right? When we've started to get a little bit more specific, how much better the mental frameworks are around those trades, and how focusing on the quality of our execution actually allows us to compound more long term, right? Than needing that result here today. As much as I would love to have another 4K day per account, it's not going to happen every day. So I'm not behaving chasing that goal. I'm behaving, okay, am I seeing price action well? Am I able to identify these variables? Can I learn from what I did yesterday to improve today? And then the P&L variance curve will take care of itself, and they'll end up with more big days right that way naturally anyway. So it's a better process. Like I said, right, we've had one red day in January. So, hard to complain about that. Okay. Yeah, that we can avoid letting those go into big losses, David. Is that what you mean? Win percentage is kind of overrated. Today we should be probably after today, creeping back up to the low 60s. Okay, held under low of day, so no interest there yet. What's going on, Jay? Well, if you have any questions, you can just ask me. can either send me a message on Discord, right? Or send me an email, michael@dtrtrading.com. No, not yet. This isn't a fake out, right? So it's you need 2 fake outs under low of day. Alright, so this was fake out 1, this was fake out 2. Alright, fake out 2, fake out 1, fake out 2. Then this held, right, under previous low of day, so there's no fake out setup here. And the volume, right, is decreasing, increasing, but not outlier. So not going to trade that. Well, what's the point of trading something where I don't know, like what the probability of being green is, right? So I'm trying to trade only patterns where I have a back-tested approach or some sort of indication of what an expected result should be. Without that information, I'm kind of gambling on what I think is going to happen versus what I've studied and seen has happened. So to make that transition, just to make $100 here and there, there's no value in that for me. Yeah, it looks fine, Sammy. Pretty deep immediate pullback, which maybe I don't like. But at this point, right, like I haven't seen any amount of follow through anywhere, right? If I'm looking at pretty much all of my leading names, they're all just telling me a story of it being, I mean, besides Apple, of being kind of stuck in the middle here, right, without a tremendous amount of movement. So if that's the case, I don't have a huge expectation that today is going to be much more follow through, right? So yeah, volume is fine, but I've got no reason to expect that it's going to move. So I will use Bollinger Bands, but more as an indication of like what a move is, right? So it gives me a better idea of is the market in compression mode or in breakout mode. So yeah, personally, I don't expect there to be too much more follow through here until FOMC today. So I'm not going to place any further trades on. So what I want to see here is once a new fake out low has been established, for us to then make a second fake out low under that price. I don't particularly look for any different volume profile or anything along those lines. It's basically just failed move and then failed move again and reclaim control of that area. Hello, my friend. Any other questions here, team? Any other questions? Sounds good, John. Have yourself a great day, man. Oh, and Rusty, I didn't see your question. Yeah, good day here so far. No complaints. 2 trades, 2 wins. Nothing insane, not like yesterday, but yeah, good day. Sounds good, Norm. Yeah, no worries, Manjeet. Have a good day, man. We'll hopefully be back again tomorrow with a nice busy day. Nice work, Matt. Yeah, guys, green is green, right? Green days turn into green weeks turn into green months turn into FUs to your boss. So I wouldn't worry about the quantity of the P&L. It's did the quality of my decisions put me in a good situation? Okay, answer today, I think pretty clearly yes. So if I behave that way daily, am I going to be in a better spot in 6 months than I am today? And that's the game we're playing for. Hey, well, that's awesome, Manjeet. Great to see you in here. All right, everyone. So I'm going to take off here for the day. Hope you all have yourselves a fantastic rest of the afternoon. Same deal like always, right? If you have any questions, hit me up outside of market hours, and I will do my best to get back to you as soon as I can. Otherwise, looking forward to chatting with a few of you here later today. And yeah, we'll have ourselves a fantastic rest of the week. So keep stacking them up here, right? Keep building out green days. Keep focusing on getting just a little bit better from a P&L perspective. And it all kind of just falls into place, right? So 2 for 2 here today. Been a great week here so far, and let's keep the good times going. So same deal like always. Like I said, don't hesitate to reach out, and I'll do my best to point you in the right direction. And otherwise, have yourselves a great day, team, and we'll talk soon.